What are the biggest misconceptions about the alternative funding space?
I had a long-standing relationship in college.
What does the evolution in Wall Street look like for you?
Every single one of them are going to sleep and waking up in the morning thinking about money.
And it's only through those trials and tribulations that you start building this, what Alex Hormozi says, undeniable stack of proof.
You're literally paying the rate right now. Now you're paying it off early to get your points or whatever it is. That might be the case.
Today we got Mr. Thaddeus Voss here with Bluegrass Lending, Lionheart Funding.
Correct.
All right, glad I got that right. This is episode 64 of How to Business. Welcome to the show. Thank you for being here. Let's just take it way back, way back. You're in high school. You're getting ready. You know, you're maybe a junior or senior. Are you already hustling? Are you an entrepreneur? Are you out there making money? Where's your head at as to where you're trying to go over the next 5-10 years?
I've had like some back and forth with entrepreneurship. I mean, I sold like duct tape wallets when I was in grade school, you know? So like, I guess you can say there's always something. But I just like to solve problems and be working on things. And school came really easy for me. So I didn't have to try very hard, fortunately. And, you know, I was cool with just like A's and B's. Like I didn't need to be like a straight 4.0. Mm-hmm. And so my free time, I started spending on doing a lot of just different things. And, you know, I was kind of nerdy in some attributes. I was also very social. Like, I just kind of feel like I was doing a little bit of everything. In high school, I was trying to start a clothing brand at one point in time. Didn't make any money off of it. Made more money from the duct tape wallets in grade school than I did off the clothing brand. So, you know, just... I guess I was kind of I was money minded, I think is like, I wasn't like, I'm dying to be my own business owner. I'm dying to be an entrepreneur necessarily. I was just like having fun fixing problems and was wanting to make money. That's really what it was. The drive was like, how can I kind of set myself up to make good money? Yeah, I guess that's how it started. I didn't really get entrepreneurial until, I guess, really lean into the entrepreneurialism until after I moved to New York. So it's fast forward a few years for sure.
When did you make that decision that I'm going to, I think, Wall Street, right?
Yeah. So I had a long-standing relationship in college, and it was just kind of like a brutal breakup. And I was just down in the dumps, like, how can I just reinvent myself? And decided to do the toughest thing possible. It was like right at the cusp of senior year where we're all figuring out what we're going to do next. And I was, you know, had a finance and marketing degree with a minor in international business. So like, I was very business minded. I was very math minded. I was like, how about I just go start spam applying to New York firms? And I just started spam applying. Like, I had the best job offer that I had at the time was a job offer with Jackson National. And it was like making, I don't know, $75,000 a year selling annuities to financial advisors. And then there's some commission on top of that. And I decided instead to do a commission-only job up in New York, which scared the shit out of my friends, family, parents, what have you. But I just wanted to I just like needed to dramatically shake up my life. I was like, how can I reinvent myself the best way possible? And I was like, you know, Wall Street had such an allure to it, and I'd never been outside of Kentucky before to live, and obviously traveled. So it's just kind of worked out that way. And then as I got that job offer, which again, it was commission only, I had some other friends from UK that were already working there. And they're like, hey, we need a third roommate. So it kind of just made it all make sense to me. It was just kind of like allowing life to happen is really what it was. And saying yes to the opportunity.
So I was curious, you know, did you have a good amount of cash in your pocket when you moved up there and a good safety net? Or were you just like, just fuck it, let's send it?
No shot. I was fortunate enough to have my parents help me out during college. And they were like, hey, you're done. And, you know, so that was a little bit of a shock at 22 years old. And all of a sudden you go from minimal expenses to $1,000+ a month in rent to having to pay at the time what seemed like a lot of money to me, $2.25 every time I flipped the turnstile on the subway, to having to pay for all my own groceries, to having to really be careful about when I ate out. And then in the first 3 months, I made like no cash. So it was a struggle for sure, but I was in the right environment to where it like didn't really matter. And you look back, it's kind of like if in your fraternity you're pledging, right? It's like the best time you never want to do again. It's kind of the same feeling. It's like, that was a fantastic time. I just don't want to do it again. But it really does shape you, just putting your back against the wall and seeing if you're going to sink or swim.
That's like year one in the brokerage, for us.
It always helps when you have people who are doing it with you. And it sounds
Yeah.
like you did. You had the roommates and you were in the right environment.
Right.
When you have people who are also grinding and struggling, like you said, it's almost a good time because you're all in it together.
Right. 100%.
So when you hit Wall Street, you take this commission-only job. We're Kentucky boys. You probably never been in an environment like that before. So what was that like? Your first day on the street?
I'd get like poked fun of by the secretaries because I had an accent and stuff like that. I don't feel like I have an accent even when I moved there. I definitely don't have an accent now. But there was, I guess, some twang. I don't know, like just on some words, and they'd always say how cute it was. And I was like, I don't want to be cute. I want to be like the guy, it was, going back to like that reinventing myself. I went by Thad my whole life. That's just what my parents called me growing up, and that's what my friends called me as a nickname. And I was like, well, I'm going to go by Thaddeus now. Sounds more professional. So it was like kind of just that metamorphosis taking place. But it was a culture shock for sure. I mean, one of the first things I saw as I got there was as I'm walking to the train station to take the Myrtle J going down into Wall Street, I see in Bushwick, Brooklyn, some homeless person shooting up heroin in their stomach because they had no veins. So like that was like one of the first things I saw. And I was like, I'm not going to tell mom about that one. And we're just going to go on with our day and we're going to see what happens. And it was just like, it was very different. And not only is it not a lot of people from Kentucky, I feel like, go to New York. I mean, it was an interesting moment to talk to my friends about it as well. But you just kind of got to say F it and you got to do it. So
did you live in Bushwick, Bed-Stuy off the J train?
Off the Myrtle J, yeah. On the corner of Evergreen and Knoll Street.
Okay. How many stops in from Williamsburg is that approximately? You like 10
From
stops?
Williamsburg to Bushwick?
Yeah. It's like
not many.
16 stops off the J train. I lived up there in New York for a year and a half.
Nice.
So one of the Kentucky folk who ventured out.
There you go.
I just, that scene, right? Like it's hard to imagine what Bushwick, Bed-Stuy is like if you've never been there.
Right. No, absolutely. Absolutely. It was, I think if you took the express train, it was about 10 to 12 stops to make it to the city. I can't remember exactly. I mean, we obviously can look it up. And then if you don't have the express train, it's going to take an extra 20 minutes or so. From Williamsburg, it wasn't long. I mean, it was just a few stops, I feel like, from Williamsburg or downtown Brooklyn. So
you're at the firm for a few months. You start making some change, right? You're making some money. What does the evolution in Wall Street look like for you?
Well, I wasn't making change at the beginning. So we have like a clawback period that takes 30 days before you can get paid out. So similar to like real estate, I'm sure that, I guess maybe you guys don't have as much of a clawback period, but you have a very long closing period. So the cool thing with us is we can close a deal in 24 hours. But the prospecting to find that deal to close within 24 hours takes time. More importantly, some clients are much harder to get than others, right? The bigger clients, typically, you're going to have to prospect with for longer. So I closed 2 deals in the first month, but neither one of them rendered commission. And so I'm like, it's just like one of those, I did it, but you didn't really do it, and you get some spiff money, but it's like pocket change spiff money. I mean, it was barely anything at the very beginning. The second month I actually closed a couple deals and I made like, I don't know, $1,500. Like it wasn't much.
That's still big money.
It was big money at the time, I guess. I was like, I only had like $5,000 to my name when I moved up there. Anything. And I was like kind of, going below the red. Like I wasn't making enough to save. Like I was just,
you were burning.
I was burning through the cash. But I just like acknowledged pretty quickly that I needed to get my hands on more files. So in my 3rd month while being there, I had access to a fraternity that I had graduated from within UK. It was, SAE. And this company did internships. And the funny thing about the internships is they made you pay for all of it. So, I mean, it was a grind. But I was like, all right, the little cash that I have left, let's throw in with a couple other guys on an Airbnb and let's get as many bodies up here as we can, and then we can leverage more people to cold call. And we ended up getting a solid amount of files in from a 2-week internship. It was the winter internship. And so it was like all these college kids on winter break. And that was kind of the defining moment for me of like getting my name out there, taking a risk, telling these individuals about this great opportunity that I haven't fully seized yet. We have to mind that most people want to wait until they've already found their success before they're confident enough to talk about it. Mm-hmm. But in reality, you're not going to find the success unless you take that risk in the first place. So it's kind of like that counterintuitive thought process. But I just said, all right, let's see what we can do. We got 17 people to come up, all of them cold calling. At this point, I knew how to cold call. I didn't know how to close very well. But I could leverage me knowing how to cold call to get more deals, so then I could learn how to close because I had more at-bats, more, a higher quantity of attempts. And that, I think, so I got up there in September of 2018. The internship was December leading into January. And I don't remember exactly what the eureka moment was, but it was in that month of January where the interns had left, and now I'm like just kind of closing up the business that was generated. And I don't know what I made, but it was like $5 or $6 grand. And I was like, okay, I can do this. And then the following month, I had a big deal that actually wasn't even generated from the internship, but it was like my first 6-figure deal that closed, which is just the contract value. But I ended up taking home like $8,000 from that one deal. And I was like, oh, okay. Now I'm really starting to get it. And at this point, I might have been hitting like singles at like $10K, $15K, $20K, $30K deals. And I was getting paid $500, $1,000, $800, but I was like crossing the finish line, right? I think some people in the space will get that. And it's probably the same with yours. You'll get that really big deal. And then it's like, I'm the shit. Like, I'm the best salesman, blah, 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 blah. Like, I didn't get a big deal for like 6 months. And so I had to hit all these singles. But what that did is it had me cross the finish line much more than some of these other individuals, which made me much better at sales and understanding the psychology of the sale. Like, it was just it was a lot of real life experience to learn. That was kind of tying my hands behind my back as a 22-year-old trying to figure out what life was all about. And I think those real life skills make me a better salesman. So now I've purchased millions of dollars worth of properties. I've been involved with different types of investment income. I've been involved in syndication. I've hired, I've fired, I've managed over 500 people. Like, this makes me better when I close because I can identify with the business owner because I know what they're struggling with. I've built out marketing channels for several different, streams, for several different vertices. Like, the things that they're struggling with, I've also struggled with in some way. And so I can identify with them and it helps you close. But that real life experience took years to develop. And so when you're first starting at that 22-year-old age, it's like, I don't really have that much real life experience, especially being someone that was a little, I was coddled a little bit, right? By my parents, and I never really left home. An hour away to go to college is not really leaving home. So,
were you doing alternative funding this whole time? Like when you first got to New York?
Absolutely. Yeah. Okay. It was the first job I got outside of college. And then COVID took place and one thing led to another. I ended up coming back home because we weren't working. And I was like, I'm not going to just not make money. So started brokering from my basement. And then, one thing led to another. Now we are where we are.
For people who might not know, like, how would you describe the industry of alternative funding? Why there's a need for it?
I think the best way to understand it is by describing it as creative finance. Like, we're going to do asset-backed stuff. We're going to do SBA loans. We're going to do term loans. The thing is, the majority of America doesn't have much assets. And the majority of small businesses, when they're first getting started, don't have any assets. So how are they going to get all these wonderful loans that you hear about from mainstream media? You really can't. So we go to individuals that either have private money or they're borrowing money from the bank, and then they're upselling it. But it's unsecured. So you're paying a premium for the rate, but you have security of there's some loans will have personal guarantees, some funding products will have personal guarantees, but it's much harder to collect. And so the market sets itself, right? If everyone was charging cheap rates, then someone charging a more expensive rate wouldn't have any business, right? The thing is, when we're cold calling, these business owners, every single one of them are going to sleep and waking up in the morning thinking about money, and they just don't have access to it. So we find other types of unsecured products, whether It's merchant cash advance, unsecured lines of credit, some type of short-term lending product that's a true loan. But then we couple that together and we're like, all right, if you're trying to get to this larger dollar amount, if you're trying to get to this bankable financing, well, this is how we do it. So we've developed cross-sell products as well, like bookkeeping services, credit repair services, credit card processing services, just to help the business owner. Because in reality, it's their decision. Like, you might not like the rate that you qualify for, but the key word there is that that's what you qualified for, and you don't have to take it, right? But we're going to show you what the best option is. If you got payroll to make on Friday, you might have to take a higher rate. But if you have the time for 2-3 months to kind of, let's get our hands dirty and let's get the business back on track to where it needs to be, well, you're probably going to qualify for something that's a little bit better, right? So we're just really trying to be that holistic financial advisor for the client, because more importantly, the most money's made off the renewal costs us the least amount, right? We want returning clients. We have about an 80% returning client basis. And so we want as many clients to come back to us as possible, because clients borrow multiple times a year, right? Just depending on the cyclical nature of their business, or if they're in growth mode, or unfortunately if something negative happens, right? They need to borrow. So, but alternative financing, I like to call it creative financing, because it's really just, how can we help your business succeed with the most creative sense possible? We have an emphasis on debt financing, but we do equity stuff too, just not as often. Equity stuff's very hard to get done. It's a very long life cycle for the client. Life cycle might be more similar to what the commercial real estate space is going to look like, 12 to 24 months. So
I got you.
Keep going.
So,
any questions?
what are like the top 3 scenarios that someone's coming to you to borrow money?
Well, it depends on which lending product. If someone has a new venture that they're looking to, the business is already established, but they're building a new venture within the business, they might want to go for an SBA loan, but they have 2-3 months to like prepare for it. The SBA is going to be the most rigorous in terms of assets as collateral. If you want to do something that is still very cheap on the rate, but it's not going to be as rigorous, we can do a term loan. But the number one product that we do sell is going to be the merchant cash advance product, and that's because business owners, they might be the best contractor, they might be the best restaurant owner, they might be the best at whatever their craft is. But with the finance piece, they're not always looking for money a month or 2 months in advance. Sometimes they're looking for money like a week in advance. In the merchant cash advance space, we can get you money same day. So it just depends on what the client's looking for. But time's going to be the biggest reason is like, I just don't have the time to go and apply for the more sturdy type of loan. So we can give them something that's unsecured that we can get closed within just a day or so.
And what are the interest rates on these things that are unsecured?
I mean, it can range from anything. We've sold interest rates as low as 5% per year all the way up to 50% per year. So it really just comes down to what the qualifications are of the client. It comes down to their credit score. Do they have existing debt? The more debt that you have, the more risky you are. So some of these lenders will come in 5th, 6th, 7th, 8th, 10th position, right? More positions you have, more expensive it's going to be typically. So.
Yeah. I mean, the interest rate is just a function of the risk, right?
Exactly.
And so your job is to qualify that risk. I mean,
correct. Well, we want a window shop, right? So we have partners with over 140 banks, and we're going to try to find you the best deal, right? It's an easier sell for us to get you the rate that you want. You just don't always qualify for it. So then we have to go through, what do you want us to do, right? There's that qualification period where the client has to understand, here's their expectation, here's their reality. What do we want to do from here? Do you want to just not look at the funding products altogether? No problem. We have to weigh the cost analysis of what we can do that's going to, affect your margins positively. We don't want you to take something that's going to harm your business, right? But sometimes you're in a crunch and you need to take what you need to take. So
yeah, because you guys are a broker in the deal, right? You guys are brokers. So you got to have the relationships with the business owners, but then you also have to have the relationships with those that are actually funding the money.
Correct.
How do you go about creating those relationships, getting into that world?
Well, the first thing is, half the business is the brokerage shop. The other half of the business is we fund our own money. So we're funding millions of dollars every single month. Mostly it's cash on balance sheet, but we have syndicates from, you guys probably know some of them just being involved in the community, right? And within Louisville, Kentucky, but we have syndicates in, Florida, New York, all over the country. But we package these loans up for the clients that we've done some business with, and we start giving them ourselves. It's typically a similar deal to what you'd be getting if you were looking at the market. We just get the interest on the back end as well as the commission. So it's like a win-win for us, and the client gets more customer service. But how do we go about making those relationships? That's what I learned so much when I was in New York, is that I had to get introduced into the industry, right? And so, I worked for one of the largest firms in the world in terms of merchant cash advance and alternative financing. This is a new thing, right? This is pre-regulation. Like, it is a huge opportunity that's taking place right in front of our eyes. I'm fortunate and unfortunate that I have to navigate the regulation as it comes. So, for example, Texas just passed a law 2 months ago that says that we can no longer ACH debit our payments. That put everything to a screeching halt for funding in Texas. Well, we just recently got our loan docs in order, so now we can lend in Texas again, right? But I had to pump the brakes, and I think it was September, and it took me 3 or 4 months to get all the way up and running with Texas lending, right? So we're in this like area where we're like pre-regulation. But back to the firm that I was working for, I mean, they are finding ways to lend to Europe, to Australia. Like, they have offices worldwide. So like, you find the proper attorneys, the proper loan docs, you do the conversions for the money. Like, this is not unique to the United States. And so now other countries are starting to see this type of lending because banks just simply aren't doing their part. Mm-hmm. Small businesses don't have anywhere to turn. So working with a firm that was that large, obviously I learned quite a bit. And you start, creating relationships through that process. Some of those relationships I carried over when I started my own. And then, word gets out pretty quick. If you start to become successful within the space, because it's a small space, lenders will start reaching out to you. There's no shortage of lenders. Mm-hmm. So there's a lot of people with money out there that want to get it out on the streets. And so there's a lot of lenders that are popping up right now. You just got to make sure you're partnered with lenders that are producing ethical practices. I mean, data security is really important. Like, some of these lenders will market to your data right after you send it to them. Like, you don't want that to take place. Obviously, that could make you lose some files. So, but it's easier than you think once you kind of get your foot in the door. So, but getting that foot in the door is kind of the hardest part. So,
and you've got different types of products. So I'd imagine that your profit margins on the products look different, right? But explain it to me very simply. How does your company make money on the loans that you're giving?
Right. So there's a spread. So whatever the lender gives us in terms of approval, they have a built-in spread that they front to us. So the spread comes from the interest rate. So they're basically trusting that they're going to give us this money up front. Typically, there's a clawback period anywhere from 1 to 2 months on the commission. And then on the back end of the deal, once they cross principal, like if you had a deal that was like 100 payback 130, well, when you hit 100K, you're not at principal yet technically because you had the commission cost that goes into it. So they're paying for that on the back end when they pay something to us. Does that make sense? They're fronting the commission. Basically, make things very simple. There's a spread built into the interest rate that we get a commission off of. So that spread comes to us for finding and sourcing the deal. Point of the matter is they actually don't get paid until whatever the contract value of the loan, they have to get that paid back, and then our interest before they actually start making profit. That's kind of what I was getting at there.
Okay, I got you. So if it was $100 grand, and the payback, sorry, do you understand what he's saying?
I think what you're saying is basically like when we take a property to market, right? We have our commission built into the price.
Yeah.
That the buyer is going to pay, right? They're going to buy this property for $500K, but the seller's not going to clear that because we have our percentage already built into that, is what you're saying. So when that buyer goes and takes that loan at that rate, you guys are technically getting paid from the lender on the spread.
Correct. Right. So there might be a 130 spread. There might be a buy rate of a 123 and a sell rate of a 130. So 23% to 30%. That's 7 points on the spread. So we're going to make $7,000 as the gross commission, as to which that goes to the firm, and then we pay out our brokers, similar to, I'm sure, how it works for you guys.
How negotiable is that spread?
It's negotiable.
Okay.
So it depends on the lenders that you're working with. The larger lenders can afford to pay higher on the spread because they have more money and they're looking for more deals. So they're willing to take a smaller profit margin, especially when there's economics of scale. As a funder myself, there's certain fixed overhead and variable overhead, but once you get to a certain point, that spread becomes larger. Maybe the first $500K a month that you're funding, you're kind of getting thin because you have so much overhead to pay for, but then that 500 to $1 million is a lot more profit within there. So as you scale, you're going to get more and more profit. But it's negotiable, and it's kind of a race to zero because all the funders that are out there, like clients want cheaper rates, right? And so they're going to go with the person that's the cheaper rate. And then the brokers who have access to the deals want more commission. So then it really just is a race to zero for the funders. Mm-hmm. So unless they can come up with creative ways to add value to the client, they're typically just, those margins are going to get squeezed as time goes on. That's kind of part of what regulation is going to do, is squeeze the rates a little bit.
Understood. So I believe I understand now. So let's go back to that example that you gave. The principal's 100.
Yep.
Right. And the payback is $1.30.
Yep.
The banks, the actual lender's getting 23%.
Correct.
And you're taking 7%.
Correct. And so they have to pay back 107, the client, before the funder actually starts to realize any gains.
I see.
And they have their overhead too.
Yeah.
So there's some risk to it for sure. But once you kind of figure it out, it's a very lucrative spread that you can start making.
You're there in the middle, right? Finding the folks who need the money and connecting the folks with the money. And that's where you collect.
Exactly.
Yeah, cool. What are the biggest misconceptions about the alternative funding space that you see?
I think there's a lot of bad players in the space. Mm-hmm. I think with anything that Wall Street starts to sink its teeth into with high ticket commissions, you're going to get a lot of people that come out of the woodwork to take advantage of it. And this industry is growing faster than what state and federal regulation can accommodate for, which is something to talk about in and of itself, because the more regulation they impose, the small business owner is the one who's getting hurt. Like, we have a ton of clients from Texas. Texas is about 10% of the market that we couldn't get deals for like 4 months because everyone is playing catch up. And the funny thing is, these states are approving legislation without really understanding the ramification of the legislation, right? So Virginia passed some laws in regards to Virginia passed some laws in regards to how you're supposed to write the disclosures, but we're like, okay, so tell us how to do it. And they're like, oh, we don't know yet. So we had to wait for them to tell us, but the law had already passed. And we're like, you're not giving us the proper information. So sorry to go down that regulation hole. We can talk about it more. But there's a lot of bad players in the space. I think there's a lot of people that are sending out documents that could be considered fraud in some areas to, trick the client into taking money that's more expensive than what they need to take. There's a lot of, marketing that's not necessarily as accurate and as true as it could be. But I think where all these bad players, are going to fail is that they're not creating long-term relationships. Again, the most expensive client is the one that's new. It's the one you don't have yet. Once you already have them, you want to nurture them, because as their business grows, the approval amounts will grow, the commissions will grow, and we'll keep making money, and we don't have to source that new client, whether it's from time or money, from an inbound lead or from cold calling. So there's a lot of unethical behaviors. And now, don't get me wrong, there's unethical behaviors in every single business, right? Every single one.
100%.
But I think it's a little bit more Wild West here than what it should be. And so, part of the reason as to why I want to do these podcasts and why I want to get my name out there is because we want to lead that ethical brigade. We also want to let people know about the industry because it's so untapped right now. And so we feel like being the forerunners within that can create synergies with better partners, can create more business for us, can get more fundings to take place, ultimately help us grow.
Yeah, 100%. You touched on how new the industry is, and then also the rise that the industry is seeing. What's driving that? Why the activity in this alternative lending space?
Because banks just simply aren't facilitating loans for small businesses. Think about it. A college student can go out and can get a federally backed loan at 18 years old that puts them in debt $50,000. You don't really have that option as a small business owner, and we don't know what that 18-year-old's going to do for GDP. The small business owner is having a greater impact there, right? So, and there's been programs that come out. Don't get me wrong. Like, the SBA program is a federally backed program. However, it's very rigorous to get that approval.
Slow, it's monotonous.
For sure.
Time consuming.
And there's other products that have released, like COVID relief products, but those are temporary. So there's really not much that sticks around long term. And so in reality, the market's just majorly private, right? It's a lot of individuals that have their own cash or getting cash from hedge funds, or, they're collateralizing something with the bank and then just charging an upsell on the interest, whatever it is. But because it's largely private, like, you're watching capitalism play at its finest degree right? Some people don't like that. And again, I agree that there should be some regulation. I just think it should be reasonable. For instance, there's no licensing required right now. So you can pick up a phone and start cold calling tomorrow. It's that simple. However, getting a license to some degree, I think would put that barrier to entry where we have to do a background check before people can start cold calling. I personally like that because I want to get those bad players out of the industry altogether. So
what are those bad players doing, I guess, that you guys aren't? Is it just selling, like you said, shopping rates that are just incredibly overpriced and misleading the client? Are they doing anything illegal or just unethical?
I think both. It depends on the person. I mean, there's, anything with financial, you have the risk of Ponzi scheme. So you got to be careful about that. But I think it's the misleading of the clients, right? There's just not good information out there that the clients can obtain to really understand how the industry works. And so, you'll get like some type of term sheet that says you get this glowing, beautiful term loan product, but you have to take this aggressive interest rate first. Let me be very clear. You never need to take product A to get product B. You can take product A and then the renewal can be a little bit better priced. You can go down a couple points in interest because you have a relationship with the bank, but you're not going to go from like a cash advance to a term loan. It will never happen that way. And if anyone's telling you that, then that's a clear telltale sign that some type of misleading's taking place. Can I sit here and say it's all illegal? I mean, some of these guys are smart, right? They're playing the law. Some of it's illegal, some of it's not. Either way, it's unethical. And that's what you want to, you want the client to be led with their best foot forward, but it's making things challenging because you have the best rate on the market and the client might end up taking an even worse deal because they have some broker out there that's putting documents that are not real in their inbox, right? And so that's just one example of how, I think it's one of the most prominent examples of what's taking place within the industry. And we just want to it doesn't help. It could really harm. Think about it, the small business. This is their whole world. This is their identity, right? If their business starts to shake up in the wrong way and it's because of something that they were misinformed for, I've heard stories of business owners committing suicide. Like, you don't want to put that pressure onto a person, right? And just exposing that and making sure clients are aware that those practices are out there and just proceed with caution. It's very easy to fix. Go look them up on LinkedIn. Go look them up on Trustpilot. Go look them up on Better Business Bureau. They don't have to have a 5 out of 5 star review, but if there's no presence, there's a reason. You need presence at least. And listen, the financial industry, whenever something goes wrong with the business, who's the person they're going to blame? Probably the money guy, right? You gave me a high rate. It's funny how clients will come to you and they'll say, I really want this deal. And then a month later, they're saying, this deal's hurting me and you gave it to me. So you're naturally going to get some bad reviews here and there. It's not even anything that we did incorrectly. It's just how the world works. But the point is, you need to have web presence and exposure. You're dealing with someone via email. Go look them up on LinkedIn. If they don't have a LinkedIn account, red flag. It means that they're not proud enough of what they sell and what they do to put their name behind it, as to which that's what we want to change within the industry. And there's a lot of other people that are in the same boat as me that want to put their face out there and say, hey, I'm willing to put the bullseye on me because I know what type of business that I do. And again, I hope that wins more business and wins more clients.
When you're brokering a deal on the brokerage side, do you represent either party, or are you just a completely independent third party? Would you say that you represent the client, represent the lender, or you are just an independent broker completely on your own? I guess the point I'm trying to get with that
you want to have both parties in mind to conduct good business. Sure. But 100%. I am independent. Okay. But maybe you want to touch on that.
I guess what I'm trying to get as outside looking in, I think a lot of people hear creative financing, alternative funding, and they think, loan sharks coming in and just getting people to sign the documents at these crazy high interest rates. How are your incentives aligned to make sure that the client really does succeed? Because you've touched on it before. You said our best clients are the ones that come back and they borrow multiple times. So I guess your business is aligned in terms of incentives that person does pay the loan, pay it off completely, and come back for more, correct?
100%. Yeah. And just to go into a smidgen more, it's that simple. You want renewing clients.
Right.
How do you get renewing clients if you don't treat them well the first time? Right? But more importantly, people are going to say, oh, I won't touch that type of rate, or I don't understand why people are touching that type of rate. Listen, every single one of you guys reach in your back pocket and pull out that credit card. It's 25% a year. You're literally paying the rate right now. Now, you're paying it off early to get your points or whatever it is. That might be the case. However, almost every single, I don't have a statistic behind it, but my gut tells me 99.9% of small businesses borrow. The only ones that don't are ones that are typically are only using cash or debit card. That's it. You have some type of lending product. Even if the client is, they're adverse to the idea of taking some type of debt at some point in their business, it's either their business stays exactly the same, which then you still have economic factors that could come in, right? But most businesses want to grow, and in that growth, they're going to take risks, and they're going to have either constrictions in cash flow, or they're going to need cash flow to go into that next thing. You just have to be ready for them when they are. That way they give you that first call as opposed to someone else. But yeah, we want returning clients. It's that simple. That's why we built credit repair, bookkeeping services, credit card processing. How can we help you today? And maybe we don't make hardly any money off of it because we really don't. So we can make a little bit more money off of the debt financing if you need it. And if you don't, no problem. We still want to preserve our brand.
That makes sense.
Let's talk a little bit about the difference between Bluegrass and Lionheart. What are the different functions of those companies? Where are they headed in terms of direction?
Well, they're different LLCs. There's different goals, but they complement each other really well. And I would like to take a moment, after this to talk about the next venture that we're trying to pull in, because my goal is to just help small business owners and help this industry. I just think that we were right before it really blows up. And if I can be a front runner and getting this information out there, it's going to help. But Bluegrass Lending wants to continue to, we want to be more. We have several different vendors that can do SBAs and term loans and asset-backed lines of credit, the true bankable stuff. But we want more creative individuals like family office money and hedge fund money to come in that can do one-off deals with clients to hopefully clean up cash advance debt or clean up other debt that they might have gotten themselves into. We want to start really leaning into more creative finance on this grander level and implementing more private equity deals as well. So we could literally help your business after you get 6-ish months under your belt. We can help your business scale, and then we can help you sell it at the end of the day too, right? That's kind of a department that I want to build on, but we just want more funding. I mean, we're funding $10 million a month, broker transactions, give or take, depending on the month. We're trying to scale up to $25 million. That's our short-term goal, 3-year goal. And where I really want to go with it is I think that cold calling is the strongest asset within the industry. And I know it's kind of archaic, but it just creates and breeds great salesmen. Mm-hmm. And so I want everyone that works with us to begin cold calling, but I want to flip it over to marketing to where once you have established the idea that you're a great salesman, we're going to still cold call, but then I can start to create more of a brand around Bluegrass and have clients come to us. And so that's how we think we're going to get over that hurdle of that $10 million a month. We have to reinvent ourselves and lean into tech. And we also want to open up affiliate arms, which is a part of what I'm going to be doing with this third business that we're opening, that me and Noah are actually doing together. But then so we're just matchmakers. That's all Bluegrass is. We're just matchmaking businesses with the best rates possible to make you happy. Mm-hmm. And we're taking a little bit of spread along the way. On the flip side, Lionheart is literally a merchant cash advance funder that takes these clients. It's the funnel. We take the top 1% to 2% of clients and we give them our cash. And the cool thing about our cash is we can get it cheaper. We can decide what happens. We don't have to wait for the underwriting team of someone else. I've gotten clients funded in less than an hour. I mean, so faster than you can blink. We're sending $100,000 plus wires, $500K wires. We know the client, we know what they're about, we understand their business. We're flinging cash to you so fast your head's going to spin as long as the underwrite makes sense because we have a relationship with the client. So you're getting tailored services to you. But the thing with this Texas situation is now we're starting to transition into lending. So now we're starting to say, hey, let's breach past this alternative financing space and let's just do true lending because that's a realistic opportunity. And with the Lionheart funding side is, we're kind of building a conglomerate out of it. So we have the money, we have the infrastructure, and we're starting to attract some real deal players that want to get started in the funding space. Mm-hmm. And we give them the money to back it. We've already done this with several different individuals. We're giving them the money to back them. They have to go find the deal. They have to service the deal, but then they get our accounting team, our back office, and stuff like that. So we're trying to grow to where we can get hopefully around $10 million a month in funding is what our short-term goal there is, but that's more of a 1 to 2 year horizon than a 3-year horizon. We're funding about 3-ish million a month. Our highest month is like 4.1. So, and that's in 1 month. That's contract value sitting out to the streets. Any questions about those two?
No, I mean, what I'm hearing is you want to get Bluegrass from the current 10 million to 25 mil a month.
Correct.
And then you want to take Lionheart from 3.5, 4 to 10.
Correct.
Right.
And one is matchmaking. It's all we are. The second is we have our cash on balance sheet, right, to give to you.
Brokerage over here, Bluegrass.
True in-house funder.
Brokerage, right?
Right.
Lionheart is the quick, hey, you need to make payroll next week, or you need to buy that piece of equipment. You don't have 3 months, or, your business is growing. You need to make a move quickly. But you also, as Lionheart grows, you want to, it sounds like, work in a long-term debt play. So like if I wanted to come to you and say, hey, Thaddeus, I want to borrow, $500,000 at 5% on 15-year AM, you're trying to work that sort of loan program.
They can graduate from Lionheart and then go back. Like we can flip-flop, right? Like a client could come in. So again, Bluegrass is the matchmaker. Lionheart is just simply the bank in-house. It's just one of the lenders that we broker to. And Lionheart takes submissions from brokerage shops all across the country. We're getting 150 submissions a day. Like we're getting a ton of paper all across the country just coming into us for us to take a peek at. But like a client could come in and start with a high, like an asset-backed lending product like an SBA, but then they need quick cash. Maybe they end up coming back over to Lionheart. Okay, so that file went from brokerage shop to in-house funding, and then goes back to the brokerage shop. We help them out with some cross-sell products to help clean up their books, and then we reapply them for a term loan to refinance out of the short-term debt that they needed to take to cover whatever problem that it was. So these are going back and forth, these products. So we have a lot of power there, right, to be able to play both of those things. That makes sense?
Yeah, that makes sense. And that goes back to wanting the client to succeed, right?
Wanting the client to succeed.
Exactly.
I mean, think about it. If we're putting our money in the client, we want them to succeed, right? We don't want defaults or we don't want people to lose us money.
Exactly.
Yeah.
So, and then the third piece that we're really trying to build is the educational piece. So fortunately, I've gone through a lot. I've bought into businesses. I've been bought out of businesses. I've had failed business dealings, what have you. I've sold brokerage shops. I've been all over the place. So what we want to do is we want to develop an opportunity for educational content to go out to the greater market. So, people are selling life insurance from their house. People are selling real estate from their house. Like, people don't really know what this is. So we want to develop training materials that way people can actually broker from their house, start their own true brokerage shop. If they need help building up that brokerage shop, they can sub us deals as an affiliate. We'll close them up for you. No non-compete, no strings attached. On the flip side, if you want to build out your own brokerage shop, great. We're going to give you the tools necessary. Hopefully we have goodwill value to where you sub us your deal flow for the in-house funding platform, which is going to be part of our play to be able to get to that $10 million a month in in-house funding as quickly as possible. So that educational component is what we're really pushing right now. And I wanted to take this opportunity to we've been doing a lot of soft launch stuff for it, but we what do you think will be in terms of when we'll actually go live with it?
3 or 4 weeks.
Go within a month. So
breaking news on the How To Business
Yeah,
Show.
there
There
we
we
go.
go. First to the story.
yeah, we've been grinding on the content as of recently to start pre-planning for it all. But it's going to be
your Instagram. It's popping off, and you're doing a lot of great videos. And is that, I'm assuming, a huge piece of it is the Instagram, right?
for sure. I mean, Alex Hormozi is going to be a big inspiration for the style of content.
Oh, yeah.
But again, I'm seeing people out there start to say I want to put my. There's very little information about the industry as a whole. There's a lot of bad players. Filter down. There's a handful, maybe more than a handful. There are good players out there, and a handful of those good players are starting to produce content. But it's kind of like fluff. I'm let's get down and dirty. Let's teach people how to sell a little bit. Let's talk about all the skepticism about the industry, and let's get our damn name out there. And let's see it. It's a risk. Don't get me wrong. I didn't wake up and say I would just love to be on camera. It makes you feel a little violated being all over the place, And I'm sure you guys feel the same way.
Yeah.
You started a podcast.
Yep.
But it's this is just such a great opportunity, and we really, truly believe that we have that value add. So that's what we're going to lean into next. But my head's in one place. I'm not trying to go start an exotic car dealership. I'm not trying to go start a business in in just a completely different field. Everything that I'm doing is is supposed to talk to each other. So the people that are working at Bluegrass and Lionheart are going to be able to reap the benefits in there, whether directly or indirectly.
So not launching another clothing brand anytime soon?
No, absolutely not. Don't think I'd make anywhere near as much money if I did that, considering my success in high school.
What about rolling some of those profits into real estate investments? Is that something? Are you even interested in?
Listen
in
to this
commercial
guy.
real estate?
Always be closing.
Always be closing.
Right.
I'm in a lot of real estate. I'm in probably like 15 or 16 deals right now. The tax benefit's great, but it's hard to prove that you're active. So I've actually been doing investment in equipment as of recently. That's probably a story that we can go into for a whole podcast. Because I can register it as active with only 40 hours a year as opposed to, 750 with real estate. I like real estate a lot. I just need to build an actual business out of it. And this might be where an always be closing kind of situation can come up. And I've talked to other individuals around Louisville, but I think that the guys that are in my firm need other places to diversify their assets outside of syndication with Lionheart. So I let all my brokers syndicate, right? That's a reward for them working with us so they can build. We like to say the commissions you build riches, the syndication you build wealth. This is like your 401k, but we're averaging, with our most aggressive fee structure on blanket syndicates, we're averaging 28% a year. It's fantastic. People are making more than that in some areas. And so, but we want to give them an opportunity. And so I've had to diversify their portfolio. So I've had this idea in the back of my mind, but I can only be in so many places at once, of building a real estate portfolio to where, like, the real estate I go into is minimum $100,000. You can't go in with anything less, right? It's, really big. I'm an LP in most of it. Some of it I own, but I just don't want to deal with it, right? And so I'll pay some fees to not deal with it. But the average person that works with us can't go in $100,000. How can we get that number down to like 10 or 20 maybe? And we can maybe even do something around Louisville or maybe around, I really like the area of Florida. Like, I don't know, just find opportunities to create like a real estate portfolio that gives my guys who are starting to really make good money. This is the other thing. A lot of these guys that make money in this industry, they have so much damn ego, and they're just blowing through the cash. It's like, hey, how do we educate our people to keep their cash?
Yeah, man.
Right? It's about how much barn you stow in the hay. There's a Kentucky-esque way to talk about managing cash.
And it's like, for that $500,000 commission check that you just collected, somebody else collected $5 million or $10 million.
Right.
It's like, be humble.
Right.
And the Ferrari's only going to be cool for like 3 months, and then you're going to ding the rim, and then you're going to be like, fuck it, I don't want it anymore.
What I realized is I went through the cars, the watches, like I went through the fades, the bottle service nights. I mean, we spent $26,000 on a dinner one time. Like, it's just, we were going nuts. And then I looked at the end of the year at my entertainment bill. I looked at all this stuff. I was like, I could have syndicated all this money. What am I doing? And that was when I was in my mid-20s, like 25. And I was like, I got to shape up, because my why truly, one, I really like to solve problems and just be like a part of a team. But, it's your future family. And like, I'm taking away from the opportunity for me to generate wealth the more I buy shit that just doesn't matter. So it's just like, you're
missing out on that 20, 30, 40 years of compounding.
Exactly. The sooner you start investing, the better. 100%.
So jumping back a little bit to the guys that are working with you and syndicating, does that work like they collect a commission and then they can roll those commissions up into a fund within Lionheart, and then that fund gets lended out, and now they have an ownership piece of the fund and they're collecting? Is that the right understanding?
They don't have equity in the fund itself.
Okay.
They have, we call it equity in the particular deal.
Okay.
So the deal itself, but to make things simple, yes, you're exactly right. They can take their commissions, they can roll them right in, and they can start compounding interest on the commission that they're creating.
Dope.
Very lucrative opportunity.
Yeah.
I mean, you got a lot going on. I'm curious, what's a day in the life of Thaddeus look like nowadays?
Oh, I'm like a crackhead all the time, just like picking up phone calls and trying to figure out what to do. It goes from marketing issue to compliance issue to got to review documents with my attorney to personnel issue. It's a lot to deal with. I'm starting to learn more and more that I really just love the sales component. Like, if I could just be coaching and selling and training like all day long, I'd be my happiest. And I have a really great team that's standing behind us, but we're all very young. So we're all still like kind of wading the waters, trying to figure out how we can scale this thing as fast as possible. And, we like to reward loyalty and those types of things. But we all have some development to do. But like, I'm really just trying to get from the legal perspective, from the personnel perspective, from the compensation plan perspective, from the, just all the lender relationships. Like I want all those things taken off my plate, and that's what I'm kind of starting to have more clarity of what I want to lean towards. But it's a trust thing to delegate, and I've delegated so well in so many areas, but that's just how I acknowledge that I need to continue to grow so much. I'm still very young. Like I'm super weak in a lot of areas. And so that's where my free time typically goes to, is like, how can I become how can I strengthen my qualities here in these areas? Because, you just can't be everywhere at once. Like the fastest way we can get to $100 million a month is by getting the right people on the boat, delegating accordingly. And that's like a real hardship that I'm trying to figure out. But I'm looking with eyes wide open. I'm very excited to do so.
Yeah, the trust is it's your baby, right? How can you trust your lieutenants and your colonels and your generals to take care of the baby the same way you would? Who do you have mentors in your circle, older guys that have maybe been where you're trying to go or crushing it in alternative spaces that you lean on that, kind of help you get to where you're going?
Absolutely. I think, when you hear the word mentor and you're just like, someone that's trying to get started in the entrepreneurial space, you're like, oh, like I'm going to go find one guy that has the keys to tell me everything. It's like, I had to network and I had to fight tooth and nail. Like some of my mentors, I just like sent them money just so they'd pick up my damn call. And now they like me enough where they pick up my call for free. But I was just like, how do I just impress them? Oh, let me send them 10 grand. Like I'm just going to fucking send them 10 grand and see what happens. All of a sudden I get a phone call and I'm like, listen, I need your time.
Do you mean to send me this?
Yeah, exactly. But, my father is a huge mentor towards me. He's, a big person that helped me in terms of the ethics of the business. But the business has outgrown his experience within this realm. So then I had to go, my uncles owned a really big business. So those are the two mentors that I kind of started with. I developed some mentorships with the company that I was working with at the beginning with people that were just better than me at selling or better than me at managing, or I would kind of be the nosy guy that was always poking my head in C-suite's office trying to get their time of day. I was fortunate enough to work at the headquarters for the office. They had like 9 offices nationwide at this point. Now they're worldwide. But I just had to I just spend a lot of my time just on the phone meeting, because funders in the area, their CEOs will talk to you if you're doing good volume. So now I have CEOs' phone numbers and I bother the shit out of them. And sometimes they won't answer 4 or 5 texts in a row. And then I'll just have to hit them with some cliffhanger. You're going to be interested in this. And I get them on the phone. I'm like, I need help. How do you do this? How can I make this make sense for you? How can I give you more business so you can give me this answer? But it's always you scratch my back, I scratch yours. Some of it is my energy will just get them on the phone. But in a lot of areas, it's I need to get this person to make some type of money off of me so they know I'm serious, and then they're going to give me more of their time. So 100%. It's always, sometimes I'll take a pay cut in certain areas to get someone's attention so they can give me their time so I can elevate on that next thing. And it's a little bit, I wish I had a proper example to give to you right now. It's a little abstract, but
I appreciate the fact that you hit on that. I mean, when I asked you that question, the first thing you led with is that, these young entrepreneurs, people just getting started, they think they're going to meet someone that's just going to give them all the answers. It's we even started the podcast that you've got to jump and start doing shit long before you're ever ready. And it's only through those trials and tribulations that you start building this, what Alex Hormozi says, undeniable stack of proof. And that's where your confidence comes from.
Right.
But with the mentorship thing, and correct me if I'm wrong here, T, but I find that our mentors in the business today are people that we made money for. People that we delivered value to. And I remember when I was a young buck and just getting in, and you're eager for people's time and ear, but it's man, look, it's I'll help you, but how are you helping yourself, and how can you help me? And it's not a rude thing. It's just kind of the way things work.
It's the first lesson they're teaching you, to be honest, because like you said, the energy and being young, and that can get you in the door a lot of times. It can get you that first phone call. But like you said, they're not going to pick up the next time you call unless you guys are actually exchanging some sort of value, which is, I agree. I think that's the first lesson they teach you.
You can have charisma in spades and be likable, but do you have the ability to execute?
Right.
Do you actually have skills?
And you're in a very, very unique space because, we're in real estate, we're in commercial real estate. There's plenty of people who have been successful commercial real estate brokers. You're in such a new bleeding edge industry.
It's smaller than you think.
And you're that person doesn't even exist that's been to where you want to go. You want to go to some place that's unexplored. You want to be a pioneer. So who do you go to for that, right? So you're having to almost piecemeal all these lessons together and then eventually just go with your gut.
Like, to give you an example, there's only 2 major attorneys in the space that do contract law. Only 2. Think about that.
Nationwide?
Nationwide. Like,
Wow.
there's more than that, but like there's 2 leading pioneers in contract law, and you're either working with one or you're working with the other, right? That just kind of shows you how small that the space really is. And then back to like mentorships, it's like, you know, some of my best dinners are sitting across from an investor who's 40 years older than me, and I'm just chopping it up and we're talking about making money together. Like, that's the kind of mentorship that you got to create, is like those relationships. Like these investors are mentors to me too in a lot of occasions. And like, they might not teach me necessarily about my craft. They're investing into me because I'm going to make them a return on my craft, but they're teaching me about other lessons that's helping me in other facets of life, especially with terms of scaling the business. Because business is all, there's a framework to business that transcends industry, right?
100%.
So management skills, sales skills, stuff like that.
And most of those people had mentors when they were young, right? They had somebody who helped them out along the way. So it's just kind of a rule of thumb of send the elevator back down is kind of the.
But I make the money. That's the thing.
Exactly.
Like, they want to meet with me because it's
100%.
a mutually beneficial thing. So,
Birds of a feather flock together.
yes.
You know, and people want to be attached to the winning team. You know, so winners collaborate with winners. Cool. Let's talk a little bit about. We're kind of getting towards the end of our show here. We like to do a blitz round. So, give us a book or a movie that was life changing for you that just really hit home. You pulled some lessons out of.
3 books come to mind. I put this in my training materials. You want to get juiced up and not be able to sleep and just go do more, go read 10X by Grant Cardone. It will get you so juiced up. It's insane. If you want to learn like factual based sales skills, because I just think that sales is the most important thing. I'm not saying that other facets of the business aren't great, but the best lawyers are salesmen too, because that's how they obtain their clients, right? CEOs are just salesmen selling people to work for them and stuff. But the Jeb Blunt books, there's a couple of them. There's one that's, I can't remember the name off the top of my head, but there's 2 Jeb Blunt books. One's like prospecting. I think it's called Fanatical Prospecting, actually. And then there's a second one that's about closing. Both of those things are great books, depending on if you're in the prospecting phase of your career or if you're in the closing phase of your career. And then the last book, which I actually think is the most important, is Ego is the Enemy. Ego is so prolific in the industry that I'm in, and I just watch it ruin sales reps all the time. I watch it ruin myself. I've watched it ruin me in relationships. I've watched it ruin me in dealing with personnel issues. I've watched it ruin me in business dealings or transactions where I didn't get my way. I mean, I just think if you can get your ego in control, it really will unlock keys and doors for you to be able to work with other people. Exactly like you said at the beginning of the show, you work with a lot of other individuals that are in the real estate space. That's a sacrifice of ego to be able to do that, right? You want to kick your feet, pout and cry when you don't get the deal correctly, or you got beat out or something, but you realize that relationship is going to come back around someday. And also you want to preserve your reputation. So we got a few more minutes. How do you check your ego, or what sort of tools have you implemented to kind of, think higher level, 30,000 feet long term? I try to pull myself out of the day to day. Like, sometimes I feel like, I think ego is a game of keeping tallies. It's like I won or I lost. And
I got to prove them they were wrong. I have to let them know they're wrong.
And when you're a business owner and you're successful, at the end of the day, you're always winning. So like, why not give the win back to your person, to the people, right? Because when they feel like they're winning, maybe you did lose in the short run, but it doesn't matter because you're going to win in the long run. So like, I think zooming out and looking at the big picture and reminding yourself of that, getting out of the day to day. But again, it's trying your best to get away from the wins and losses and those tallies altogether. Like, it should not be tallied up. Another thing is like being so fast paced and being an owner. It's like, I have all these problems I'm dealing with and I prioritize speed. So like, I want to respond to everything right away. Well, sometimes I'll type things out and then I'll send it and I'm like, I know that the right person would read that and know that I meant nothing negative by it. But I know that majority of people would read that and say, you're an asshole, right? And I'm just trying to get the job done as fast as possible, but that's not how people work. People want to share their ideas. You hear their ideas, let them be a part of the decision-making process, and 9 times out of 10, they're going to bring a sense of clarity to that idea that you didn't have before, even if you end up going with your original plan. But just stop texting so damn fast,
Slow
or
down a
emailing
little
so fast, or calling so fast. Hey, sometimes you need to take a day to respond, right? Allow yourself to do that, and that proper barrier that you set, or that boundary that you set, will actually be more respected. So people like get caught up saying, if I don't respond right away, I'm going to lose some type of respect because they don't think I'm paying attention. You're actually going to create more respect, especially if they ask you that question and you say, hey, I didn't have the proper answer for you. I really wanted to think about it before I gave you one. That is so mature and such a great way to lead a person that you're working with, as opposed to giving that quick response. And don't get me wrong, I still give a lot of quick responses. But I think that's a really easy way. It's just like, hey, stop what you're doing and read what you're about to say. And don't be scared to take an hour or a day or a week to respond.
Or if you're dead set on responding immediately and that's what you value, just say, hey, I need some time to think on it, and I'll get
Exactly.
back. So you're not leaving them hanging. But I'm with you. If you're always available, then that decreases your value in some capacity.
Right.
Maybe that was ego talking.
Yeah, there you go.
All right, so moving on to the next question. It's a 100-hour week. You've been in meetings and, press tour, everything. What do you do on the weekend to kind of ground yourself, relax, chill? What does Thaddeus do to, when he gets
Decompression.
home? Decompress.
I mean, if I'm like really overdone, then I'll just sit at my house with my dog and my girl and my cat and do nothing. And I'll tell Lauren, I'm like, listen, I don't want to be talked to today. Like, it's just one of those days I need to rot. But I think majority of the time, like, I want to travel. So the benefit of doing what I do is I have offices in multiple locations. So I can be like, oh, I'm going to Arizona for work, but I'm going to go hike Sedona, right? I'm going to go to New York for work, but I'm going to go, we'll go ice skate at the Rockefeller Center or something fun.
I love it.
I like to drink, not overly. I'm like a 3-drink kind of guy, but I like to do it all at a dinner where I'm buying a bunch of food and with some good friends. Like, I just love that. And then if we can talk business while we're there, it's like, just makes it even better. Like a chef's kiss on top. And then working out. I mean, you got to work out to stay sane. So
Absolutely.
Love it, man.
Last question. If business meetings had a walk-up song, what would your walk-up song be?
I don't think I've ever thought about that.
This is a unique one. We've got all kinds of different people on here. We've had everything from Beethoven to Kanye West. So there's no wrong answer to this one.
Beethoven.
Oh, yeah.
I mean, I don't know. The Rocky theme song is the first thing that comes to mind.
That's not bad.
I don't know.
Walk-up song.
I think that's, yeah. When I used to walk out of the subway in Wall Street, I would always envision that I was walking out of the tunnel in an NFL game. And I'm like, we're getting it, baby.
It's that big city energy.
But, I would, my music would rank anything from like rap to EDM to all over the place. But I think like the most consistent, I think Rocky theme song would be fun.
That's
I don't know.
That's a classic.
I guess. I don't know. I've never
Someone
been
asked
that
us, I don't think
question
you
before.
were on the pod, Sam. Someone asked us what our songs would be. I said it'd be some Kanye song. I don't know which one. What do you have an answer what your walk-up song would
Eye
be?
of the Tiger.
I know you were on that pod.
Yeah.
That's right. Eye of the Tiger, baby.
That's right.
Well, hey, this was a blast. We really appreciate you coming on, Thaddeus. I mean, anything else that you want to plug? You're obviously launching the education program. I think that's going to be awesome. I mean, where can people find you? Where can they follow you? Where can they subscribe?
Yep. At Thaddeus_Voss_. Fortunately, I didn't get the at Thaddeus_Voss. Maybe I have to pay for that or something. But it's at Thaddeus, THADDEUS_Voss, V as in Victor, OSS. That's going to be the best way to contact me directly. Feel free to DM, whatever. Whether you're interested in working, whether you're interested in, investing, whether you're interested in educational content. Also, my Instagram bio has some quick links if you guys want to fill those out as well. Like if you want to apply to work in an in-person job, like you can just go apply on the link and we'll match it up with you. But yeah, just DM me on Instagram. So
Awesome.
Love it.
Thanks for coming on.
Yep. Thanks
Appreciate
for being
it.
here.